Hello guys, welcome back to my YouTube channel, and today's topic is about trending day market. So in this video, I'm going to tell you, or I'm going to discuss how we should approach or take trade on a trending day market, either on a downtrend market or in an uptrend market. Most of the time, all of us, especially retail trader who are having less experience, they used to jump into the market when they see big move. Once they see green candle, they jump, and once they see red candles also, they jump. They try to catch each and every move in the market. But remember only one thing, guys, don't try to catch each and every move in the market, because market won't respect nor market won't listen me nor you, and no one will be 100% sure or will be right in each and every trade. So that's why stop loss is compulsory when you take trade, either on a trending day market or range bound market or in any types of market or in any market. So now I'm going to show you the trending days look like this. Suppose now the market started falling from higher level and then pull back little bit. After that, start again to fall and pull back. Start again to fall and pull back, and so on. Now the market will face a resistance or will pull back to this area, where for the first time it takes support, and after that the market broke this area, with this big red candle. So we should not jump or catch the market from this area. We should just leave it or avoid and wait for the pullback or retracement. This is the pullback or retracement. So from this area, then you can take or you can short the market with a proper stop loss above the entry price and the target below the swing. I means the nearest swing. This is the nearest swing, and the target, first target will be nearest swing, and second target will be below of the nearest swing. And next, suppose if the market is trending on the upside, it will go up like this, pull back, go up, pull back, go up, pull back, and so on. So now when you see the market, for the first time it face a resistance around this area and then fall back. And later on, market try to break this area, and once it's break, most of us and most of the time, majority of the retail trader, they jump from here or they try to catch the market from this area. So these type of breakout, I means like 90% of the times we will face loss if we jump from this type of breakout. The reason is the risk reward is not matching at all. So never jump either market breakout or breakdown. Just wait for the retracement. And after the market break this area, we can see that the market retrace back or pull back to this area where it faced resistance for the first time, and now it's taking support around this area. Then from this area we can go long or we can buy, and then the stop loss is below above the entry price a little bit, and the first target is nearest the swing high. This is the nearest swing high, and the second target is above the swing high. So this is how we should trade on a trending day market. And now I'm going to show you in Nifty chart. Examples like today, we can see that market is trending on the upside, and the market right from the beginning started increasing, and it faced a resistance around this area, and from this area it fall down, and later on market try to break that area, and finally it break with this green candle. So from this area we should not jump or go long. We should wait for the market to retest or to retrace back in that area where it faced resistance for the first time, and now the market try to take support in this area, and from this area we can go long and target hit. Now I'm going to show you the downtrend market, how we should approach to the trading, or how we should take trade on a trending day market. As we can see here also, right from the very beginning, market started falling down, and it faced some kind of support over here, and then bounce back above. Then what happened later on, market break that area and then fall down. So in this area, let's say we might miss the trade since the pullback did not came. So we'll just leave it. If the pullback doesn't came, then just leave that trade. Don't jump. Don't say that, oh, I miss it, then I have to catch, I have to jump so that I will make money. No, market won't go anywhere. But if we lose our capital or our money, then from where we can get it. So we will just leave it like that. There are some days that market won't give us opportunity to take trade. But on this day, after the market had broken down this area, it fall down and it faced some kind of support around this area. It tried to break, but it cannot, and then pull back a little bit and then break with this huge red candle. So see here guys, if you take or if you short the market from this red candle, this breakdown area, what will be happen to your position? The market try to retrace back, then you will face loss, right? So that is why we should never catch the falling knife. We'll just wait for the market to retrace, wait for market to pull back. Once the market pull back or retrace, then you can take your short trade or your P. And now we can see that the market pull back or retrace in this area where it face resistance. Before it take support around this area, and now it has face a resistance. So from this area, you can short the market, keep your stop loss above the entry price little bit, and the target nearest your swing low. That is your first target, and second target below your swing low. So that's it guys for today, and please do share, like and subscribe to my YouTube channel, and press the bell icon so that you will get others video when I upload.